So the issue is those assets aren't going away. The only they're going to buy a ranch in Texas because they want to say I own a ranch in Texas. What's happening is there's competition entering the market, and Bitcoin is a competitor for that capital. So I think we could probably just agree that Bitcoin competes with it competes for capital, and it's a good competitor. And if I had a choice, I would probably prefer to own the Bitcoin if my primary goal is store of value or long term capital preservation. And that's just going to drive down the price of it's going to make the building cheaper. Maybe it'll make the sports team cheaper. It'll make the Picasso cheaper. Maybe in a bond, it'll make the bond cheaper, which means the interest rate will be driven up, right? And in a competitive market where you have a free market and no capital controls, right? Then in that case, take example, right? When you have a weak currency, you have a high interest rate. You have to pay higher interest rates to get capital, right? If there's no capital controls. So I think we could say that Bitcoin is a competitor for capital against all these other assets. So if you were to say, Mike, I think that the P to E and the S&P will go from 22 to 18,